Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, July 1st, 2013. And this is brought to you by Triton Wave Consulting, which are early warning market timing indicators used in all time frames in all markets by traders all over the world. I am also going to include in this video my outlook for gold, which I usually do exclusively for gold clients, but this time around I decided to add gold just to let everybody in the free video know what I'm doing with gold. All right, well, as long as we're talking about gold, let's start off with gold and see what happened with gold last week. As some of you know, the ones that are subscribing to the service, I've been short gold for a long time. I do go on the long side once in a while when it calls for it, but this is a weekly chart on the left-hand side. Let me just get a pen here. And gold, we started shorting gold right in here and got this chunk, wrote it up here, got this chunk, a little bit of that, and this is, keep in mind, this is a weekly chart here. So we can break it down into a daily chart and I'll show you what's going on. But basically, it's kind of obvious the trends are down. Now, when it hit, the last time it rolled over, right here, it moved right into this exponential moving average right here, almost right on the nose, and then popped up. So right now we are up 17. It's 6:50 in the evening. Sunday evening on June 1st, last day of June, and we have been in a steady downtrend since October 1st of 2012. So, bang. So you can expect. There's not going to be buying in here, basically. There's going to be short covering. There's going to be buying against people's will so that they don't kill their account. So you can see that, you know, like there was a rush to buy in here. It looked like a rush to buy from all the pundits, but actually it was short covering, and it was a good, you know, like 150-point move. But it was right into the, let me see, that is the 8-period exponential moving average on the weekly. So it looks like the 8 period is kind of holding right here. Now, right now, let's move over on the right-hand chart here. Is the daily. So if we go back to this point on the left-hand chart, it's okay, that's October 1st. So we started getting chunks in here. Sideways, didn't take anything there. Bang, wrote it up here when it hit this line, mainly because T2, T3, T4, and T5 are below zero, and also all of these are below zero except for T5 is not yet, but you can't really play T5 because it's really, really long wave. So if it tells you anything, it tells you that gold has probably zigzag its way down, but that the 5 is still above zero, T5 is still above zero, so there's a good chance, there is a pretty good chance that when it pops up, it'll pop up a almost like a huge standard deviation, or what I refer to as one fib line. That's a lot easier to understand. All right, so we did start, let me see, this was in July. We've been basically playing this. Oops, let me get, hang on one second. Okay, those of you who follow me with gold, we played this little chunk down here, we played it up, we played this down, we played this up, we played this down, we played this up. We missed this one. I think we got stopped out a couple times here, but we got this, we broke even on a trade here and got this piece, and now we're waiting to see which way it's going. I know it's 15 points right now. Let me move the daily, instead of turning this to a daily, okay, now you see that on the daily, all 5 waves are down. Alright, so on the left-hand chart, I'm going to make this a 1597, which, and use the, even though these are all down on the, even though these are all down here, I'm going to use the 1597 as an anchor chart. So, and I'm going to use, on the right-hand chart, we'll use a 377 tick. So these are nice little trading, this is a nice little trading tool, the 1597. It tells you with the waves when to get in, when to get out. So, like for instance, the other day, we had a move, this move right here, where it broke here. It doesn't necessarily mean it's going to break, even though it breaks. It could break down and then spike up again. So I let the waves tell me which way it's going to go, and since this was up a little bit and this was sideways, I knew it wasn't going to go too far because this was just barely up. And then when this cracked, it led into this, and this, and we captured this move. Okay, on the bounce, right in here, it wasn't much of a bounce. So since the daily is like really huge on the downside, I let this one go. And also because T5 is below 0. And still is. Well, actually, it just went above 0 on tonight's trading. T5 just went above 0 on tonight's trading. So this may try to go up another 20 or 30 points. I'm not really sure. I have to watch it. Sometimes I get signals at 2 o'clock in the morning, 3 o'clock in the morning, and I just shoot out an email, and who's ever up and paying attention, they get the trade. Okay, so we got this here in the 1597, and I ignored this one because I wasn't sure whether the weekly exponential moving average was going to hold, and I thought it might go through it, so I ignored that one. We kind of like took half off and left the rest on, and then got out. The rest of it got out here, because by that time, T2 and T3 and T4 and T5 were above 0. No sense in staying in. So we got a little tiny piece of that, but basically I'm not playing this because I didn't know whether it was a temporary short squeeze, and I'm not taking a chance. So if we look at, let me see what's happening very recently. Okay, very recently on the 377. So if you're actually day trading this and you're looking for buy signal, you know, like if you're right on top of it, you're not going to meetings, you're right on top of your computer all the time, and as soon as you start getting above 0 on like right around like 1:45 in the morning on Thursday, which is right about here, this is actually going down on the 1597. You're looking for start looking for breaks here and breaks here to the upside, but mainly you want to come over on the right hand chart at 377 and look for a really good entry, because you don't want to get in and then all of a sudden it goes down 10 points, 12 points, you get stopped out, and then it takes off without you. So that's what happens a lot of times. So the safe trade is to wait till T5 goes above 0 right here, and that takes you at about 1200 even, which was a good spot because that's where all the resistance, that's where all the support was, and then it became resistance, and now it's going through resistance with T5 going completely above 0. And if you're ballsy enough to stay in the whole weekend, boom, you got paid. Okay, so right now we're up 15. We've been as high as let me see, 1240 right now. We've been as high as 1240. We've been as high as 1244. So we'll see where it goes. All right, let's take a look at the S&Ps. Okay, so on the S&Ps, you can see that I am using a 21-minute, just a daily, daytime price. I'm sorry, daytime trading. There's no Globex trading on this, but it gives you nice clean lines because it lets out the fluctuations, like the low volume trading overnight. That might be good for gold, not necessarily good for the ES. So each market has its own peculiar anomalies that once you get to learn them, then they have nuances of habits that once you get to learn them, then it's much easier to find the right timing gauge for it. So we're looking at this, and this is the left-hand chart. On the left-hand chart, we're looking at a daily ES that I've had a sell signal on since an official sell signal since June 10th, right when this went down. Now it went in our favor really quickly, made some money on some puts, then it went against us, and then more than made up for it here. So this is about the area where I said that you would wake up one morning and have 40-point loss. So when you woke up, it was a 22-point loss that turned into a 40-point loss. And the 15 points that went against us here covered the first leg down. That was 15, and this was 40, and I think this was another 15 or 20 before it reversed. So right now we are in this little basket area right here, and we're down 125, 1.25 points on the S&P, which is really no big deal. But there was huge selling, end of the quarter, end of the half on Friday, pre-week holiday trading, you know, like get out in May and go away kind of thing, sell in May and go away. Well, if you're out of the market, you know, that's probably good. If you're in the market, you may as well play it, and there's going to be some great plays coming up here. So I believe this market is going down. Let's look and see what the crosses are looking like. Okay, besides the waves, besides T1, T2, T3, T4, T5, and for you newbies, it's Triton wave 1, 2, 3, 4, 5. I just call them T1 through 5. All right, so we had this cross. We had this we had this 821 cross. Now, that's fine in and of itself, but you can have 821 crosses here, it goes back up again, and then it comes back down, it goes up, comes back. Very confusing. Look at this narrow, for 10 days we had a narrow span of trading. All right, so what happens here? What was the difference here of this moving? The difference was, look at the expansion between the 8 and the 21 as it crosses, but even more importantly, look at this right here when it crosses when it crosses the 55 period moving average. Okay, so when the 8 crosses the 21 and then crosses the 55 and is waiting for the 21 to catch up with it, that is a death knell for the market. And I fully expect this to come down to 1550. I don't know how quickly it's going to be, but it's going. So here's the 21 on this side, and you can see the sell-off. You can see these sell-offs right here, right, plain as day. And this is what I give to my clients. I just give them a heads up. This is coming. This is coming. They rush to their computer. They make a trade. They stay in the bumps. You know, unless we're doing like day trading over like a 20-minute period or a half an hour period where they're getting in and out like very quickly. This is just a nice slow and easy. You buy some puts on the SP on the SPX or the ETF SPY, and you know, you double triple your money. Buy it here, double triple, buy here. This happened on Friday. Okay, so this is the lead. This should follow. Bing, bing, bing. And since this is so close to 0 or below, this baby is toast. And I've been warning you guys for a long, long time. Don't let your 401k turn into a 201k. Okay, so let's take a look at Apple here. I've been like a huge bear on Apple, and we've gotten some fantastic results on it. Now, just playing, T1 didn't actually go below 0 on the daily until like a few days ago. But the slope here and down here, this was sloping down when this was going up. So I took a look to see what was going on in the 21-minute, the cash price. And so basically every time this went down, and since T3 was halfway below, T4 was completely below, and T5 was completely below, I knew that going down here, that this was just a temporary expedient to be over 0, and that it would behoove me to look at the 21-minute chart. So we've got short here, covered on this, and this is a 21-minute, so this is just kind of slow and easy. You just do it and walk away. Stayed out here, shorted that baby down to here, and didn't take any chances, and it did go a little bit further, and when it got into here, we covered everything. So not quite to the bottom, but you know, like about 5 or 6 points from the bottom. And so where it goes from here, hard to tell. Let's look at the let's look at a 987 on this, and let's look at a 1597. I forget what I was trading on Apple. Whoops. No, we don't want that one. 6. Okay, we're doing the 6. All right. So here's whoops. Let me see where this goes back. This whole thing goes back 5 days. So this is all last week, but you can see some of the moves here. Since this was like, since the blue line was completely below 0 until right here, then basically the plays are, and since the daily is just now going below 0, but it's been sloping down, and this has been below and this has been below. We're only playing at the downside on Apple until it says anything else. So, for instance, goes up here, it goes down here, but when it goes up, you ignore it. And even though it captured, you know, like 6 or 5 or 6 points, you ignore it because the big moves are on the downside. Goes here, boom, boom. Goes up here, did not take this move. I wouldn't take this move until T5 was completely above 0, which actually it looks like it's going to, that it did happen. Okay, well, I wasn't paying attention. That happened about noontime on Friday, and then you got some covering into the close. So I've added Apple. The service that I have right now adds Apple and all the high-profile stocks with options to buy puts or calls, and I let you know, either texting or emailing instantly when I get a signal. Like, for instance, I get a signal right here, boom. If you're just a day trader and want 4 or 5 points, boom, you got it. We'll have to wait and see whether this holds through on Monday, because this is above 0, whether this is a move to the downside. And if it is, it's a very ephemeral other words, short-lived move to the downside. So you have to know when you're making a move whether you're going with the market or against the market. So you have to know whether it's with the trend or counter trend, and you can do both. Just have to have heads up about how much of your account that you're using to play with. So if you're doing a with the trend move, you can do a full like a full size of your normal full size contract. Counter trend move, you should use half in case it kind of like backfires on you and kind of moves up. For instance, I've seen this happen. You use a counter trend move like this, and then you start getting giddy about how much you're making because you think you've caught the bottom, and all of a sudden, boom, you're down like this. So instead of being up 7 points, you're down 15, or you're down 10 to 15. That's what I'm talking about. That's if you're not paying attention. Okay, I want to move back to gold one more time because I wanted to show you something. Let me see. Gold. Electronic. Okay, we are now up 12. So we're $9 off. It's 12.35 right now. Price of gold, not the time. And we have been up another $9. So it was up 20 bucks. So we'll look and see, whether this spike low is going to hold. Remember, this was the weekly low on the exponential moving average on a fib number. And we'll see whether it goes to the 8 or whether it goes to the 21 or comes back up to the 55. I had no idea. I do not prognosticate where gold is going to go except when the waves tell me. When the waves tell me, I tell you. That's part of my service. That is my service. So that's basically all I have for tonight. Good luck trading, and I will see you at the next update. And again, this is Triton Wave Consulting, and I am Rodney Julian, and these are all examples of how the algorithm for the waves fill in and give you early warning market timing for all markets and all time frames. Have a good evening, and I will see you at the next update, and good luck trading.